the misery of what's happened with the stock, these losing streaks down 11 straight days. Earlier, I think this week we're talking about 8 straight down days. Well, now it's trying for its best day of the year. There it is. It's up 6% right now. Not the best levels of even the morning, but off of these earnings. It's our chart of the day. Stephanie Link joins us now on the phone because, Steph, you've been in the center of many of these conversations that we've had over Nike, and you've said, stay the course, stay the course. China's going to get better. It's still Nike, right?
Yeah.
And here you are, rewarded in some respects. Now, the stock has obviously had a tough go of it, but you're getting some of it back today.
Yeah, look, there were very low expectations headed into the print. As you mentioned, down 20% year to date. And the earnings were solid, right? They beat on the bottom line, mainly because of better SG&A. But if you look and you dig deep into the revenues, Nike brands rose 2.5%, and average selling prices increased in all geographic regions. Jordan brand up double digits, and as you mentioned, China up 12% constant currency. That's the second quarter of double-digit growth for China on a constant currency basis. They're gaining market share in China, and China consumer wants to spend. And I've been talking about that for a really long time. I was wrong for a really long time, but I do think the consumer in China is certainly poised to continue to spend. And you had global same-store sales up 12% on a constant currency basis as well. But the key number, Scott, you and I have talked about this a lot, is the EBIT margins. They actually beat by 180 basis points. And the reason that's important is because they're guiding for upper teens in the next couple of years. They just put up 12.5%. So I have a little more confidence they can get to that upper teens. That means they can do $650 in earnings power, up from $380 this year. So, it's not cheap, 24 times, but it's below its 10-year average at 28 times. So I'm definitely going to stay the course. And if it gives back a little bit more, that gives me more of an opportunity to continue to buy this because it is still down year to date.
To your point, too, about China, John Donahoe, CEO, said, I think he's been there a couple times in the last, 4 to 6 weeks, I think he said, roughly. And he feels good about what he saw and what he heard. And as you've made the case that, China, as you just said, is going to come back.
Yeah, I think you're seeing China come back in a couple of places, right? In cosmetics, luxury, Macau, and now apparel and footwear. So I think you're going to continue to see it. You had a lot of pent-up demand. So I think that's going to be the one bright spot in China. You don't want to own China as a whole, but that one piece is certainly where I have a lot of conviction.
Yeah. Steph, I appreciate you calling in.
Thanks,
wanted
Scott.
to hear from you today, given our conversations recently about Nike, which is up 6%. Joe, I turn to you because we've had many too. Mm-hmm. You have it in the Joe T.
We do.
I feel like now, and I know there's only so much you can say because it's not rebalance time yet, but I feel like you've emotionally and psychologically had one foot out the door on this thing. Now, does this change the way you're feeling about it, given what they delivered, what the stock's doing, and what Donahoe himself said?
If you're purely looking at the factor of momentum, which is an integral consideration for what will be done on October 31st, what has happened with this bounce with Nike is it's put itself in a position to where I would say it's now a yellow light. So that would assume that previously it was a red light based on where it was. It's important that Nike maintains the price gains that we have had since yesterday afternoon. And if it's able to accelerate from there, then at the end of the month, we'll take a look at Nike and decide what to do with it.
Yeah. Weiss, you heard Citi's Jane Fraser with Sarah out at Pebble. Resilient consumer, but a softer one. Since we're, broadening it out to the consumer's gotten us here, mm-hmm. The consumer needs to keep us here, right? In terms of where we got into in this market, in large respects, the economy too.
Yeah, and I think that's the issue. So there's a tendency in the market to say, hey, look at the data today. Everything's okay. Mm-hmm. But that's not what you have to do. On data that comes out, you got to look at 3 months, a 3-month trend, right? You should have a job to do that with a lot of it. But you've also got to say, okay, what is the direction? And the direction for the consumer just isn't good. We've heard it time and time again that they've depleted their COVID savings. They've drank through that fire hose of demand. Now that's done. Now where are you going? So in addition to the payback of student loans, et cetera, there's a lot of pressure on the consumer. There's pressure from the gas tank. There's pressure from living with this higher inflation, which even though it's come down, it's still pretty high.